Hello and welcome to today's session. We'll be getting started momentarily. Just confirming the audio. Perfect. So let's get started. Thank you so much to everyone for taking the time to join. We are going to be taking questions in the chat. So if you're watching this as we record this live, please go ahead and ask questions in the chat and I'll answer them right here during the session. If you're watching this as a recording, you can ask questions in the comments and we'll get back to you within 24 business hours. Today's session is going to be going over a very popular topic for our customers and prospective customers, which is the idea of using your retirement money as a down payment to obtain an SBA loan and how you're able to use that money without having to pay taxes or penalties. So let's go through our initial slide here, which gives us a good roadmap of what we're going to talk about. And again, thank you everyone for joining. Please like this video. Please subscribe for more videos like this as we do weekly webinars, and you'll get the notifications and have the ability to listen to the recordings. So as far as what we're going to talk about in today's session, we're going to go over how it works. So the basics of how you're able to use your retirement money as a down payment to obtain an SBA loan. Then the process to how to get an SBA loan, the process to obtain one, as well as all the way to closing on the loan. The guidance from the SBA as far as combining an SBA loan along with 401k business financing, and then just some practical considerations about using an SBA loan along with 401k business financing, as well as the considerations that the banks have of getting approved, in short. So, and then finally, of course, we'll include how you can get more information about your specific situation. So again, please don't hesitate to ask questions, but we're going to kick it off here with the first slide of how to use your 401k or IRA as an SBA loan down payment, tax and penalty free. So the basic concept here is a ROBS transaction, which a ROBS would allow someone to use their retirement money to fund a business, whether it's the startup of a new business or buying an existing business from an unrelated person without having to pay taxes or penalties. So the key ROBS requirements are that you have to have eligible money. So that means that money that's in a former employer plan or a non-Roth IRA. So you can't use money that's in a Roth IRA, because in order to complete the ROBS 401k transaction, you have to be able to roll over the money to a 401k. And you cannot roll over money from a Roth IRA to any type of 401k, including a ROBS 401k. So if it's IRA money, it has to be non-Roth IRA money. So another key ROBS requirement is that you have to use the money to fund an active business, whether you're buying a business or starting a business. So an active business would be an operating company that's providing goods or services. You have to run the business as a C corporation. So you cannot run the business as an LLC or even a corporation taxed as an S corporation. It has to be a corporation under state law that is taxed at the IRS level as a C corp. You have to be a bona fide employee. So for example, working 1,000 hours per year. So you can't be just a passive investor. You have to be working in the business. Of course, you can have other people working for you, but you certainly have to be working in the business, because the way that you're able to access the money without having to pay taxes or penalties is you're moving it from your existing retirement account to your new employer 401k. So in order for you to participate in that new 401k, you have to be an employee of the business, which entitles you to participate, roll over your money, and then invest and fund the business. So the next part of the slide here goes over the ROBS 401k process. So just to go through the process flow. So step one, we set up a corporation. So that's usually going to be in the state where the business is located, where you live. So if you're doing this in North Carolina, it's a North Carolina corporation. Once the corporation is established, so the articles are issued by the Secretary of State, that entity will sponsor a new 401k plan. So we are an IRS approved 401k plan provider. And our plan allows you to invest in your own business. So the corporation is going to adopt the 401k plan. The money's going to roll over from your existing account into that new 401k account. And then once it clears into the 401k, moving on to step 4, you invest the money from the 401k into the stock of the C corporation. So at the end of the day, the corporation issues stock to the 401k. So you end up owning a significant part of the company through the 401k. And then the corporation has the proceeds of that stock issuance. So the money that you rolled over and then invested, it has that money, which it can then use for legitimate business transactions. So a legitimate business transaction would include a down payment to obtain an SBA loan. And as we'll see as we go through the slides here, the SBA recognizes in their guidance to the banks that a borrower might be funded in this transaction. So it's certainly something that is widely used. It's been widely used for years as a way to obtain a down payment to qualify to get an SBA loan for your business. So let's move on and start laying the foundation with the SBA loan basics. And again, please don't hesitate to ask questions, but we'll just keep going through these slides. So what is a SBA small business loan? So some individuals, when they first start investigating this, think that the SBA is actually lending the money. The government is actually lending the money out. They're actually not making direct loans to entrepreneurs or even 401k plans. What they're doing is they're providing a guarantee to a bank or lender, essentially to encourage the bank to lend to someone that the bank might not otherwise be willing to lend to, because they're using the money to start a small business. So the government essentially guarantees that loan to give the bank the confidence to fund the loan and make the loan to the business owner. So usually with individuals that are looking to use 401k money or IRA money to fund a business and also get an SBA loan, the type of SBA loan is a 7A loan. So 7A loans can be up to $5 million. The terms are 10 years. It's prime plus 2.25 to 2.75 as far as the interest rate. And the down payment that the banks are looking for is usually 10 to 30% down payment. Of course, that's a relatively big range. Of course, that depends, if you're buying an existing business or if you've got some seller financing versus a startup, that'll move that number around. And of course, just within the bank's own underwriting standards. But that's your typical range that you're looking at. Now, as far as the SBA loan process, we could really break it down into 3 steps. So you have the application package process. So as you can imagine, right, getting any type of loan, it's usually very document intensive. And this is going to be the case when it comes to SBA loans as well. So you have your application. There are certain forms that the SBA requires. There's what's called Form 413, which is a personal financial statement. Form 1919, you're going to need to gather 3 years of tax returns. If you're buying a business, you need to have the tax returns of the business that you're considering buying, your professional resume, a business plan. So the banks really are evaluating the transaction from multiple angles. I mean, they are almost acting as an investor. So they want to understand about you. They want to understand about the business that you're buying. They want to understand about your personal financial situation. Because ultimately their goal, of course, is they want to make sure that you pay the loan back. Then once you gather all this information, step 2, the bank underwrites it. And really the time period of that underwriting process is going to depend on different factors, right? I mean, if you have all your information, all your ducks in a row, it can move relatively quickly. Sometimes though, you don't, just because you're dealing with other third parties that are maybe not providing the information in a timely fashion. So that can stretch it out. And of course, banks, they do take some time to evaluate it, especially if you're looking at maybe a larger dollar loan as well. So that's another consideration. They can extend that processing time out. Step 3 is closing. So once the bank approves your application and you proceed with the transaction, before you close, you're going to need to provide a number of documents to the bank. So that's going to include things such as, your articles of incorporation, the bylaws, insurance, lease information. They usually want a letter from us as the 401k provider. And we'll talk about that in a moment. But the final point here that we want to convey is that, yes, we certainly do assist our clients with obtaining an SBA loan as well as closing on that loan. So we're putting together all the documents that you need at the closing so the bank actually gives you the money so you can complete the transaction. So we have we are well versed in the rules, especially as it applies to 401k business financing transactions. So we have a network of lenders, and we will help our clients obtain a loan, and then once they're approved for one, close on that loan. So the next slide here, before we start, I would just look and see if we got any good comments here. We do. We actually have one about, do we shop the loan? So yeah, let's go back to the prior slide. Thank you so much for asking that good comment or question. So we do have a network of lenders. I mean, so we have been doing we've been in business for over 10 years, thousands of customers. Many of those customers have used our 401k business financing plan to obtain an SBA loan. And so we've always helped our customers put together the package, and we've just developed a network of lenders that specialize in SBA loans. They're familiar with the ROBS transaction. They're familiar with, a lot of times, the type of business that you're looking to start or buy. And so what we will do is we will ask a lot of good questions that the banks are going to want to know about your transaction or your situation. So we'll gather that information, and then we'll share it with our network anonymously. We're not going to just pass around your contact information, and then get feedback from the banks. And then what we'll do is we'll share that feedback with you. And then if you like the feedback, we'll put you in touch with the banker. So we can usually get feedback on your loan. Your good follow-up question there is, how long does it take to shop the loan? We can usually get feedback on your loan within just 1 or 2 business days, at least an initial cut, to see whether it's worth pursuing and viable. And then, of course, then you would have a conversation with the banker. Then you could start putting together the information for the application package. Great question. Thank you so much for asking. So please, don't hesitate to ask more questions as we go through this. I'll take us to the next slide here, which is SBA loans practical considerations. So as I alluded to earlier, the SBA guidance does in fact recognize that a borrower could be funded in this manner. And they actually just recently updated their guidance this year. It actually goes into effect today, October 1st, 2020. And that guidance continues to confirm that a business that is funded via a ROBS transaction is eligible to get an SBA loan. The reason that they had to come out with guidance originally stems from the fact that under the SBA rules, any 20% or more owner needs to personally guarantee the loan. And so if you are funding your business, say that C corporation, and the most of the money is coming from the 401k rollover, then most of the stock is going to be held inside of the 401k. So technically speaking, a 20% or more owner of the borrower, so that corporation, is going to be a 401k plan. So the problem with that is that under the IRS rules, a 401k plan cannot guarantee a loan to the sponsor of the 401k. So you have a conflict between the IRS rules and the SBA guidance. So the SBA guidance understood that, recognized it, and said, okay, well, that's fine. Then we would look to you essentially as the individual to guarantee that loan. So if you own over 20% of the company stock through your 401k plan, the 401k is not going to guarantee the loan, but you are personally going to have to guarantee the loan. And so that's always been in the guidance for years. And then what they recently did is just update that. They added a few more documents essentially that need to be provided or obtained by the bank to go through the SBA process. The next point here, and if you're looking at the SBA guidance, is that in what they call an EPC-OC structure is not eligible. And that's interesting because sometimes bankers are not aware of that requirement. So an EPC-OC structure in simple terms means that you have two entities essentially that are operating your business. You have one entity that's the passive entity, for example, it's holding real estate, right? And then another entity, which is the operating company. And so an EPC-OC structure is eligible for an SBA loan, but it's not eligible if you're funding that business through a ROBS transaction. So it's sort of a technical requirement. It's, as I mentioned, sometimes bankers are not aware that it's not compatible with a ROBS transaction. So that would be something to, that's the type of guidance and expertise that we can give to, so you don't get to the bank and end up having to reconfigure your transaction or your structure. So in the simple term, the simple takeaway there is that you need to be owning the real estate and operating the business through the same entity. We got another good question here. Is the SBA loan to the ROBS 401k or to the corporation? So it's to the corporation. So whether you're getting an SBA loan or you're getting just a regular bank business loan or you're getting seller financing to buy a business, the obligated entity is the corporation. That's the business. That's the entity that you're running the business through. So that's the borrower for purposes of an SBA loan. So the loan is certainly not going to the 401k, it's going to the corporation. Good question. So our next practical consideration here is to discuss it early in the process with a bank. And the reason for that is that a lot of times the banks will want to adjust or add terms to the deal, right? If you're doing, if you're buying a business, they may want to have the seller provide some financing to help manage the transition risk, to keep the seller engaged. So if you go to the bank with a fully baked deal and then the bank wants to change it, that could present some complexities there for you. So the next couple items here is just the concept of getting approved and some of the considerations that the banks have. So as I talked about or alluded to earlier, the bank is really looking at the transaction from different angles, right? They're looking at it in terms of your personal, they're looking at you, right? So your experience, your credit history, your personal financial situation. If you're buying a business, they're looking at the business that you're looking to buy. Okay, what type of, what are the financials of this business? They're also looking, of course, at your collateral and the business that you want to have going forward, right? What type of collateral would that business have? So once you kind of understand it from that perspective, it makes sense as far as the things that are going to be important to the bank and getting approved, right? So in terms of your personal financial circumstances, right? One fundamental piece is going to be the credit score. So usually you're going to need at least something in the high 600s. If it's below that, it's going to be more of a challenge to find a bank that's willing to approve the loan. Do you have other sources of income? So that could be something that's very helpful, right? Because if you have other sources of income, then there isn't tremendous pressure for you to take money out of this business for your own personal expenses, and therefore increase leaves more money in the business so that the business can pay back the loan. So, that could be a spouse. That's definitely something in your favor. If you have another spouse that's working, if you have a spouse that's working, bringing in money while you're doing this business, takes the pressure off the business to pay you so you can live. As far as your personal financial circumstances, you've also got your home equity, right? Because you're going to have to personally guarantee the loan. How much equity do you have in your home? Do you have other properties, maybe that are investment properties that you have equity in? Your business management experience. So if you have experience in the industry that you are looking to get into, that's going to be tremendously helpful, right? So, because in that, the banks want to know that you've had experience hiring people, firing people, just all the ups and downs of running a business. So if you are somebody maybe that's a professional, let's say you're an attorney, and now you want to start a cupcake shop, that's going to be more of a challenge because you have maybe never known what it is like to run a business, and so the banks are going to be more hesitant to want to lend to you. Collateral, that's our third one. We talked about that could be in the form of equity in your home. It could be in the form of collateral that's in the business that you're looking to buy or start, right? Are you going to have significant equipment? Are you going to be buying real estate? All those things can play into the equation to get your loan approved. Debt service coverage ratio. So this is the concept of, in simple terms, does the business have enough money to be able to make those loan payments? A lot of times the banks are looking for a debt service coverage ratio of about 1.25, although there's variance and flexibility. But just to define it quickly, that would be really the money that's left over after paying expenses, your salary. Is there enough money left over to make those loan payments? That's what the question is in simple terms. So that's where they look at, if you're buying a business, let's look at the tax returns of the business that you're buying, right? Does it look like this business is generating enough cash for you to be able to make those loan payments going forward? And then down payment. We talked about the range of 10 to 30, but there is a lot of variance there depending on, what type of business you're looking to buy, what the collateral is. A lot of times you can help meet the requirement if you get seller financing. And then, of course, the 401k business financing would be a great way to come up with some cash to meet that down payment requirement. So I'll stop and let folks ask questions. Thanks again for participating. We'll flip forward to the next slide. So here we've got how you can contact us to get more information. So you can call us at 1-800-489-7571. You can email us at business@mysolo401k.net. Please like this video. Please subscribe. Thank you so much for joining today. And I see we've got a few more comments coming in, so let's get these answered. So who pays the loan back? Good question. So it's got to be paid back by the corporation. So it's not paid back by you personally. It really needs to be paid back by the corporation because the loan is to the corporation. So even if you weren't funding your business through a ROBS 401k business financing transaction, if you're going to the trouble to set up an entity to start or buy a business, you really want to, the best practice is to run the business through that entity. So that means if the entity is obtaining a loan, then the entity is paying back the loan, not you personally. Just like you wouldn't have the entity, pay back your personal mortgage, right? Because that's a personal expense. You're not going to pay business expenses personally on behalf of the entity. Good question. Yes, well, thanks again, everyone, for joining. So please like this video, please subscribe. If you're watching on recording, you can ask questions in the comments. So have a great day, everyone. Thank you.